Good morning everyone. I am Anjali Kumari and I am here to present a PowerPoint presentation on the topic Cashbook Books of Original Entry, which is given by our faculty Pawan sir. Definition of the Cashbook. Cashbook is used for recording all the cash and bank transaction, all the receipts and the payment which has taken place, and receipts are recorded in the debit side and the payments are recorded in the credit side. Here are some advantages of the Cashbook. Cashbook is journal as well as ledger. When Cashbook maintain no separate cash counter is open in the ledger, hence it prevents duplication of work in recording cash transaction in journal and then posting them into the ledger. Second, since cash account is not open in the ledger, it prevents the size of ledger from becoming too voluminous. Third, both bank transaction can be entered in the Cashbook. Fourth, it enables the businessman to know the balance of cash in hand and cash at bank at any point of time without waiting for posting from the journal. Fifth, Cashbook is just similar to journal also. Here are some points. Just like journal, in the Cashbook also the transactions are recorded for the first time. Second, just like journal, in journal also there are chronological order. The transactions are recorded date-wise. Like that only in Cashbook also transactions are recorded date-wise. Third, when we post journal transaction to the ledger account, in Cashbook also the transactions are posted. And the fourth is in journal we maintain ledger folio column. In Cashbook also we maintain ledger folio column. Now some similarities of Cashbook with the ledger account. Cashbook closely resembles to a ledger account. It has two equally divided sides having identical columns. The left side is the receipt side and which is the debit side, and the right side, payment side, is the credit side. Second, when Cashbook is maintained, cash account is not open in the ledger, hence the Cashbook is a part of ledger also. Third, just like a ledger account, the words to and by are used in the Cashbook also. Fourth, it is balanced just like ledger account. Here are some types of Cashbook. First, single column Cashbook. Second, double column Cashbook. It also has three subdivisions. First is cash and bank column. Second is cash and discount column, and third is bank and discount column. And the third type of Cashbook is triple column Cashbook, and fourth type of Cashbook is petty Cashbook. Here is the presentation of the kinds of Cashbook. What is the single column Cashbook? Single column Cashbook is the simple Cashbook which has the in debit side it records receipts and in credit side it records payments. This is the format of single column Cashbook. Now coming to the second one, double column Cashbook. Double column Cashbook has three divisions. First is cash and bank column, second is cash and discount column, and third is bank and discount column. This is the format of Cashbook, a double column Cashbook with cash and bank column. And this is the format of double column Cashbook with cash and discount account. And now coming to the third one, triple column Cashbook. Triple column Cashbook is basically, it has three amount columns. First is cash amount, second is bank account, amount, and third is discount amount on the both sides, in the debit side also and in the credit side also. This is the format of triple column Cashbook. Now coming to the fourth and last one, the petty Cashbook. Petty word came from the French word petty, which means small. Basically, in petty Cashbook, small transactions are recorded. There are two types of petty Cashbook: simple petty Cashbook, and second one is column petty Cashbook. Thank you. That's all.
Hello everyone, I am Zach and I am here to show what are the accounting principles that everyone uses in modern accounting. So first of all, what is accounting principle? Accounting principles are the very basics, very fundamental parts of accounting. They are the general guidelines to show how to do accounting and what to do in accounting. Next, what is generally accepted accounting principle, also known as GAAP. GAAP are the set of rules given by the Financial Accounting Standards Board. These rules are used worldwide by all accountants and are common for all of them. Coming to the first principle, that is business entity concept. This concept says that the business and its owner are not the same thing. They are completely different beings and has its own separate legal entity. Coming to the next one, that is money measurement concept. Money measurement concept says that only those transactions are recorded which can be recorded on the basis of money that can be measured in the monetary value. Next is going concern concept. This concept says that the business never ends. Even if the owner dies, the existence of the business remains the same and it keeps going. Coming to the next one, that is accounting period concept. This concept says that you have to do accounting per year, or we can also do it on daily, weekly, monthly, six monthly, etc. These are not the only one. There are many more principles such as cost concept, dual aspect, or matching concept. These principles help us to make accounting common all over the world. Thank you for your time and listening to me.